Moving on, someone asks, can you go over the fee structure for the Titan Fund for both existing PCM LPs and prospective LPs?
Yes, absolutely. The fee structure completely mirrors the Peterson fee structure. So in fact, we have designed it with operations they're just totally aligned and exactly the same. So the fee structure is as follows. There is a zero management fee for any partner that has 2 million or more in the fund. And that's across all of these, including Talis. I mean, there's zero management fee. We have an exception class for those who have between 250,000 and 2 million in any of these funds. I think Talis actually has zero all the way to the bottom. There's zero management fee at Talis. That's very unique. We have an exception class for Titan and Peterson, 250,000 to 2 million. There's a very small 0.9% management fee. Okay, 0.9% is like less than a financial advisor charges to go find a fund to put your money in. So that helps us keep the lights on a little bit, but you can imagine zero management fee, 2 million and up. I mean, we don't get paid at all for anything. We have to make returns to earn any income. So we have zero management fee. We have a 5% hurdle rate, means we never charge on anything under 5%. Every year at January 1st, it starts over. If we don't hit 5%, we get paid nothing. Titan's the same, Peterson's the same, Talis is the same. You get nothing. So after and above 5%, we share in the upside for that year. 75% goes to the LP, 25% goes to the entity, Peterson Capital Management, Talis Capital, Titan Capital. Okay, so that's the general fee structure. We also have high hurdle rates, high watermarks. We have a hurdle rate. Our hurdle rate's 5%. Our high watermark means if you're not at the highest point you've ever been, we don't charge anything. You have to be hitting new highs and you have to be going over your hurdle rate. So this totally aligns everything. This is based on the original Buffett partnerships, by the way. So this puts total alignment. I mean, we don't want to go down. And we've had down years for sure. And actually, it's probably maybe some of you that can read through the lines. It's nice to see that when we go down, we don't just shut funds, because that is a unfortunate practice by some managers. When you go down in a year, the whole next year you're climbing back up to your high watermark. You're not getting paid. I mean, we don't make anything that year. So we are really conscious of downside protection. We are not looking for opportunities to make 3, 4, 5%, because that does nothing for either our partners or us. So we're really looking for great long-term compounding opportunities. So to summarize it all, I know it's a little bit complicated, but we basically have a hurdle rate of 5%. We have zero management fees, a hurdle rate of 5%, and then we have a performance fee above 5%, 25% of the gains above that. Okay, so if we have a 9% year, Peterson Capital Management or Talis Capital or Titan Capital or Talis Capital will earn 1% of the 4% above 5%. We also have high watermarks in place. And if you look around at a lot of funds, I think Guy Spears, CFO, years ago wrote the article with whom I would invest. And they looked around for fee structures of this nature. And we ended up with Talis and Peterson. They found, I think, 40 funds in the world. So there are like thousands of funds, 40 funds in the world. And there's only a few of them that are truly aligned with their investors in the way that Warren Buffett and everybody else has taught us. So hopefully that's helpful. I know it's a mouthful and it's a little complicated, but we're not doing 2 and 20, which is like the old standard method. This is zero, a high watermark, a hurdle rate, and then we share in the upside only above the hurdle rate. And every January 1st, we start again at zero, and we have to hit that hurdle rate again. Thanks for the question.